In early deals, the ruble was trading in the red zone. It came under pressure amid numerous headwinds, both internal and external. One of such negative factors is falling oil prices. Worries about low demand for the commodity and possible easing of terms of the OPEC Plus deal fueled bearish sentiment on the oil market. Brent futures with the delivery in September lost over 1% in the afternoon trades. A barrel of the North Sea crude benchmark was valued at $42.28. WTI futures with delivery in August also lost ground, having declined to $39.50 per barrel. The market sentiment deteriorated amid tensions between Washington and Beijing, as well as the coronavirus issues. The risk of strict quarantine measures in the states is becoming real. New restrictions have been introduced in California, where the number of cases increased dramatically. Thus, July is going to be a harder month for the oil market than expected earlier. Worries about a fall in demand may intensify if the quarantine measures are implemented. However, the current downtrend on the oil and futures markets is correctional. It is premature to suggest any major sell-off. Tomorrow, the OPEC Plus meeting will be held, which is going to be a tough challenge for oil futures. Most experts anticipate that the cartel's members will refuse to extend the current deal on output cuts until August. If oil producers decide to reduce output by 7.7 million barrels per day instead of the current 9.7 million barrels, it would be a bearish sign for the market. The oversupply issue, along with the risk of the American quarantine measures, will fuel worries of market participants. Currencies of emerging economies are rather stable, despite fading sentiment in the foreign markets. In fact, investors are a bit puzzled. On the one hand, they are trying to avoid risky assets because of the possibility of the second coronavirus wave. On the other hand, risky assets are becoming more popular due to the cheap liquidity from the largest central banks. Despite a downward trend, a barrel of oil costs $42. Thus, there are not enough reasons for the depreciation of the Russian ruble. The dollar-ruble pair gained 0.2% to trade around 71.10. At the same time, a real escalation of the US-China conflict may have a significant impact on the Russian currency. Moreover, the coronavirus spread also weighs on the ruble. The World Health Organization reported a record slump in the number of new coronavirus cases in the world. More than 230,000 people were tested positive. If traders bet on the safe haven assets, including the US dollar, the dollar-ruble pair may consolidate near the level of 75 points or even higher. Traders should also take into account that the ruble is also negatively influenced by the fact that non-residents repurchase currency at the expense of the received ruble dividends. Besides, a reduction of the currency interventions implemented by the Bank of Russia may decrease the ruble exchange rate. However, the Russian national currency can be supported by the currency selling for the ruble dividends payment. Moreover, the tax period will start on Wednesday. That's all for now. Thank you for watching and see you back tomorrow.